The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the February 5th terrific Tuesday edition of the Opening Bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a wonderful Wednesday. Let's make sure that you and I do everything we can to have a terrific Thursday, an extraordinary day. And of course, the easiest way to do that is to always remember that life happens for us. That's right. Life happens for us, not to us. When you and I, when we make that one little shift, it changes everything in our world, because it means that you and I, we can find the gift in every set of circumstance that life is going to throw at us. So let's go check out the circumstances today in the markets. Right now, we've got the NASDAQ up 21 points. It's trading out at 42.25. S&P futures are up 15 points at 2,044. Dow futures up 107 at 17,675. Russell 2000 up about 8 points at 11.95. We're going to go figure out what all that means. Of course, the most important thing is that I'm grateful for your presence here today. Now, I'm here to serve you. That means, if you'd like, you can call in. We can take a look at any stock chart you want. We can take a look at it from both sides. We've always got to take a look at it from the buyer's side, the seller's side, the bullish side, the bearish side. We've got to take a look at every single stock chart, anything that we trade from both directions out there. And you can do that by calling in at 877-927-6648. Of course, internationally, we'd love to hear from you as well. 727-445-1044. This is Terrific Thursday. Of course, it's none other than Tiger Financial News Network. Doesn't get much better than that. I'm Steve Rhodes. Welcome to the show. Let's go check out the European markets out here. Right now, the DAX over in Germany down about 38 points, trading out at 10,873. As we check in on the DAX, what do we know about the DAX? Number one, it completed a 1-to-1 A to B equals CD to the upside out here. That price projection was 10,957. DAX is really just kind of taking it easy right out here as we speak right now. And it's on its way up to its next level. Once it's got to clear that little shooting star candle from February 3rd, that high out there, 10,984. Once it clears that level, then 11,429 is in its sights out there. That's in the DAX. If we look at the FTSE right now, the FTSE over in the UK, it's off 15 points, trading at 68.44. That looks like the FTSE is just kind of gearing up to take on that 69.05 level. Ain't no failure inside the FTSE unless it closes back below the 67.54 level. That would be your 2007 high. So it's up above, it's tested, it's come back and tested, it's rejected that area. So that 69.05 is really going to be the next touch point for us to understand what's going on in the markets, regardless of all of the other stuff. You knew I was going to use some other word, some other four-letter word out there. But no, you didn't catch me doing that. But we just got to tune out all that other stuff. Because if you want to find reasons to justify bullish or bearish sides of anything out there fundamentally, it's easy to do. But that's not what it is that we're doing here at TFNN. We're taking a look at technical patterns out here. We're using a whole assortment of tools to help us identify what the markets are doing out here. If we take a look at what went on over in Asia last night, a little bit of a mixed bag. The Shanghai off 39 points, a little over 1% to the downside out here. That doesn't look like, that is this morning. That was yesterday's out here, yesterday's price. But just really consolidating sideways out here. I don't see anything significant. You know, in the case of the Shanghai, the reason why it's struggling here is it's kind of like a pole vaulter that knows that it's got to clear just this much more whatever this much is, in order to in order to get above a resistance zone. Well, in the case of the Shanghai, that's at 3602.66. Clearing that will be very large, very big. So it's just kind of garnering up some strength here, just winding up that rubber band. At least that's what it looks like at the moment. Over at Hong Kong, the Hang Seng out here, that was up 85 points last night. It made sold off from its highs, opened up, sold off a bit, but still, there's nothing really bearish about. The bearish side on this is really this little key reversal, bearish engulfing session. That was from January 27th. That high out there is 24,995. Clearing that will be very positive and says it's ready for its next move higher, and that's in the Hang Seng. Nikkei. Nikkei last night traded down 174 points. Been a bit of a struggle here for the Nikkei, but just like all the markets, kind of this consolidation chop. I mean, you talk about one world markets. Well, guess what? The Nikkei, who's going to be the first one over? Who's going to be the first one over? We're going to go take a look at our markets out here, our futures markets. We're not going to see anything different. You're going to say, hey, Steve-O, change your chart because we'll keep looking at the same chart. Like the chart pattern here inside the Nikkei looks just like the composite with regard to its consolidation. In fact, this one starts off November the 4th out here inside the Nikkei. So, and consolidations are very, very frustrating for most folks out there. They really shouldn't be. Because what you want to do is I heard John Logan caught the last half of his show out there, and he made a great point out here. And this is the point. This is how I'll correlate it, which is this. The most important thing that you can do is spot a consolidation, because the market's going to do one of three things. They're either going to be trending higher, trending lower, or trending sideways. It's that sideways choppy action that can really get you all cut up. Because there's something good for the bulls one day, maybe more than one day, and there's something good for the bears one day, maybe more than one day out there. Typically, it's from the top and bottom of the consolidation. Now, the beauty of the consolidation pattern is that it's a winding up. And the beauty of it is that it's really one of the breakouts. Most people don't like to buy breakouts. So if you don't like to buy breakouts, then you buy at the bottom of the consolidation. If you don't like to sell breakdowns, then sell at the top of the consolidation and be ready to flip your position. Be ready to flip your position or at least close it out if the trade goes the other way, because your measured move is going to be equal to or greater than the consolidation. Pretty simple. Inside of the Nikkei, it's either going to break to the downside below this hammer candle out here that formed back on January 16th. That low is at 16,592. And if it does, the measured move is going to be, 16,7, 17,7, 2,000. And but now there's 1,250 points, somewhere right around there, about 1,250 points, which you can catch. You could maybe catch if you play one of the ETFs out here. If there's an ETF that actually emulates an Nikkei exactly, or it's going to be a 1,200 type point move at a minimum. That's the measure move. That's the expectation. That's the anticipation, either to the upside or to the downside out here. And the point that John was making was it's also a good time to just take a walk and not trade if you are trading using maybe daily signals out here. A lot of great intraday type trades. Just understand where it is that you are with inside of the consolidation. So that's the Nikkei. You'll see if we go take a look at our futures market, let's look at the Dow out here. Take a look at its consolidation pattern. Okay, basically the same thing out here as taking a look at the Nikkei. We're starting at just about the same day. In this case here, I like to use that October 31st low. That's at about the 17,006 area. In the case of the Dow futures today, they're trading just above their market profile resistance zone. Haven't been able to close above that resistance zone, for quite some time. Did for one day, a little head fake out here on January 22nd. But basically, they've been traveling below their resistance area since January 12th. Now, that's a really cool piece of information, in my opinion. The thing that's really cool about it is, again, today, it's trying to take on that level, which, by the way, is at 17,628. If we see the Dow futures close above that today, excuse me, PDG, pretty darn good chance that what that is now signaling to us, because it has been able to do it for, 10, 15, I don't know how many trading sessions. It's quite a few trading sessions out here. Pretty good chance then that the signal will be price is going to move up to 18,051. So if you're short be paying attention to that. If you close below that level, 17,628 today, the Bears have not lost the battle, nor have the Bulls won the battle. We'll just simply call it a draw out there. So there's your consolidation, 17 to 18,000. So you get a 1,000-point move. Whichever way the Dow breaks, above 18,051, below 17,006, we ought to see about a 1,000-point move out there inside of the markets. If you go take a look at the NASDAQ out here, let's take a look at the NQ. And the NQ here, struggled a bit yesterday. And if we take a look at its consolidation pattern out here, at least the bottom of it, we go back to that same time period, that October 31st. So you're around the 4,087 mark. And I'd say the top of the consolidation box right around the 4322 level. So what are we talking about? Under a 300-point move out there, 275, I don't know, something like that. And that's the type of move that we should expect. But in the meantime, we haven't broken through the consolidation level out here. I would have to say that today, closing above close above its market profile high. It's got to close above it by more than a couple of points. By the way, that's at 42.10. 42.22 right now. Pretty good signal, pretty good chance that what price will do is move up to the 43.23 level. Will that get taken out this time around? I don't know. I wish I did know, but I don't know. I'd say there's a pretty good chance that it will, but we won't know until price gets up and tries to bust out the highs. We took a look at the ETF structures, the diamonds, the Qs, the SPYs, the IWM. It couldn't get any simpler than that in teaching you about volume and swing points. Couldn't get any easier than the mere fact that there was not, last time on the push down here a few days ago, that it was across the board. There was not enough volume. There were not enough sellers to break through those swing points out there. So you can't bust them down. Chances are the market goes ahead and tries to bust it to the upside. And it doesn't matter whether it's a grease fire or whatever is going on in the markets out here. There's enough things to spook anybody. But it's been like that for so long. Why don't we just lose all that stuff and use that for talk and discussion around the dinner table, the breakfast nook, whatever it might be, but then just trade the technical patterns. It doesn't get any easier than this with regard to knowing that we're in a consolidation, and maybe it's a good time, as JL said, maybe to step aside, or as I say, buy the bottom, sell the top out there, and just be ready to flip the position if price is breaking to either side. Again, the patterns out here the same. If we take a look at the, if we take a look at intra-session, where are we at right here? Let's look at the 30-minute chart here for the ES Mini. ES Mini is right up against the resistance zone from yesterday. So as we came into that 4 p.m. close, it's a 30-minute chart that we're looking at. If you're watching us on Tiger TV, I hope that you are. But certainly as we came into the close yesterday, so between 3:30 and 4, and, whatever news it was, whether it was the East, it doesn't really matter, because when you and I, when we trade technically and we look at these charts, how many, if you can tell me that the market had moved down because of the ECB or something else that took place yesterday, you take a look at that big old bearish engulfing candle inside of the ES Mini, then tell me what happened right here at this time frame when the market took off at going into the close at 4 p.m. on the trading session of February 2nd. Can you remember that? Or can you remember, if we come back here, what happened here at this trading session at 3 p.m. on January 30th? I can. Maybe you can. You might have one of those memories that can remember all that stuff. What I know is that if we just simply trade the signals of the bulls and the bears out here, they're going to give us plenty of information. So what we do know on the shorter term time frame chart is we've got some significant resistance up at the highs here from yesterday. The market just simply has gotten back up there at that 2,049.25 level. It hasn't gotten all the way and tested that high. I suspect that it will. Maybe we'll get that seventh inning stretch candle formation, that letter G in the Chapman wave, Stevie's favorites out there. 877-927-6648. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame.
Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 100 points right now. S&P futures up 13. Let's go to Bartow, Florida, to Tommy. Tommy, thanks for calling. Thanks for holding.
Hey, how you doing? Hey, your guy that comes on at 4 o'clock, I don't know his name, but he's constantly saying that the market is deviant. I find it ironic when it was up yesterday 100 and then closed flat. It's suddenly not deviant. It's, oh yeah, is this guy seeing a psychiatrist?
Okay, folks, sorry about that. Let's go back and take a look at the. You gotta love it. Okay, so let's go back and take a look at what is. Let's go take a look at the currency markets out here. If we take a look at the currency markets, let's look at the euro, Japanese yen out here. See what it is doing. It's trading out right now at the 134.19 level. Now the key here inside of this currency pair is going to be that 134.56-ish type level. That's that white line on my screen. That is that's your 13-day exponential moving average. It's a great tool to also use as a resistance level. We can see how that has acted. Both the 8, the 9, the 13 have really acted as resistance inside of the euro Japanese yen. We want to pay attention to this, just because it is the currency pair that tracks our U.S. stock market better than anything else. And the reason that I can't tell you the reason why. I just know that it does. I know that to not pay attention to it, it's like driving down the road and ignoring all kinds of traffic signals. So, the only traffic signal I think worth ignoring when you're on the expressway is the one that's the speed limit out there. That's just really a guideline, isn't it? No, I'm just kidding out there. You got to pay attention to those speed limits out there within a range. But let's take a look at, this currency pair. You can see it's been also trading sideways out here, just like our market. So it hasn't busted. The markets haven't busted. No real clues out here. We know where the levels of support and resistance are, which is really a great thing inside of the market. So that's what's going on with that currency pair. Let's look at the euro versus the U.S. dollar index out here. If we take a look at this is the one that represents, I think, 57% or so, 56.4% of the U.S. dollar index. So you've got to pay attention to what's going on inside the euro. But basically a similar type of a move out here. It's put in what looks to be a bottom. Hasn't really bounced much, so there's not much to say here. We've seen that the retracement done from its low to the high out here back on February 3rd is similar to in size its largest bounce that it has had ever since it made highs back here in May 2014. So it's just done the same harmonic pattern at this stage. If it can get up above, in this case, it's really say the same thing. It needs to clear that 13-period exponential moving average. That's what's going on with that. If we take a look at the Great British Pound, it's just, pretty much... let's see here. What is this doing here? Great British Pound actually getting a little bit more of a bounce. Great British Pound looks like it has... it's really doing everything that it can. Let's take a look at a trend line to suggest that it's trying to change its trend. But I don't think, even if we take a look at a trend line out here, and let's do that. This is a trend line. Let's use a nice little red line out here. And I'm going to come back all the way to this high back in July 2014. And so this is the, I'll be son of gun. Okay, so it's really right up. It's pretty much right up against the trend line right now. Now, what I'm using here for this trend line versus a channel. So in a trend, I'm using I'm actually using the wick of the candle. So I'm using the high of July 15th as my first touch point. That's out at a price point of 1.7191. Then I'm using as a high out here, December the 16th. I'm using that high, 1.5786. And you can see that price inside the Great British Pound has run right into that level. So I would say that clearing this spot where it's at, but 150 to 1, just say we'll call 153, would say that the Great British Pound is doing everything in its power to change its trend. So the key would be what happens if it pulls back into that level. Does it reject it? And then does it go ahead and move higher out there? Looks like there's a question there. Euros held, Larry P's key. Okay, 113. Okay, just looking at something else. So that's what's going on in the currency. Now let's go take a look at the hard currency market out here. Still not any more information with regard to Goldilocks and its full moon that took place a couple days ago, because we still have this inside bar. You see, the full moon took place here on February the 3rd, and ever since then we've got a high and a low which has not been tested, broken out above or below. And so gold typically has an initiation move in a full moon more times than not, and I do mean more times than not out there. But until we see a break of this, right now I've got to go with the current trend, and the current trend inside gold, this little channel line, has really held as a resistance out here. Gold's unable to get above that. I think all the bullishness in gold is just going to take a little time to unwind, and it's doing it one little paper cut at a time. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 90 points, trade out at 17,760. The S&P up 10 at 2,051. Composite up 12 points, trade out at 47.29. Russell 2,000 up 5 points. She's trading at 11.97. DAX off 37. FTSE down 13. Gold off $4. Silver down 28 cents this morning, trade out at 17.11. Light sweet crude up $1.24. She's traded at 49.68 or so. Leading the charge to the upside, it's Hospira Sierra Inc., HSP is the ticker symbol, up 35%. Maybe that is a buyout or something going on out there. That I don't know. Let me see here. Pfizer anticipates Hospira transaction. Yes, it is. So nice little 35% premium there. O'Reilly Automotive, though, that's up $14, up 7% out here. Grace, W.R. Grace and Company. What a story behind that one. Up 15%, up $13 this morning. Tableau Software up 14%, up $12. Activist PLC ACT's got its act together this morning. That's up 2%, up $5 and change. Netflix up $3.50. L Brands up 4%. Estee Lauder up about 5%, up $3.47 out here. Tesla up $1.75. Amazon up $3 and change. To the downside, Green Mountain Coffee Roasters getting roasted and toasted this morning. That's down about $9 off 7%. We looked at that yesterday. And I would imagine being down $9, that may be below resistance. We'll take a look at that. You got Feng Shui, FEI company. Actually, I don't know what it is. FEIC. It's a ticker symbol. That's down about 8% off $6.81. Cummins Inc., CMI, down $5.90 off 4%. Prudential Financial off 5%. Teradata Corp off about $5. Michael Kors Holdings down 4% off $3. Costco Wholesale, what a great facility that is, off $2.80. Fortune Brands down $2.89. Allstate is down 3%. Okay. So where do we begin our journey here for the next 20 minutes or so? Let's see. Where do we want to begin that journey? Let me go take a look at that 30-minute ES mini chart out here. No, hasn't made that seventh inning stretch reach just yet. Let's go take a look at some of these things here, moving and grooving. Let's take a look at Green Mountain Coffee Roasters, see what it is doing. So gapping down this morning. Let's go. Yeah, it's below the resistance level, below where it had broken out, and came back and tested it with lighter volume. So far, 1.4 million shares today. Now let's put this on a weekly chart and see where this thing is trading down into. So if we take a look at Green Mountain Coffee Roasters out here, one of the things we want to do, let me turn a couple things off on my chart. Let's go ahead and start with the nice clean little palette out here. Let's get rid of that, come on, that too. Volume we'll leave out here. Take this off. Okay. So what we'll do is, I've got all the earnings dates on there, back on there. Let's go take a look at the trend line here. So Green Mountain Coffee Roasters. There we go. Yeah, that's one trend line. Okay, that's way down there. Let's use a secondary trend line out. It's come off of November 2012 area out here, and so Green Mountain Coffee Roaster still, in essence, really says that because this shorter term trend here, which was broken a while ago, really says Green Mountain Coffee Roasters now ought to move back to. And how about that nice little fan out there? Ought to move back to this secondary trend line out here. Now its volume from the week that began August 18th was 15 million shares. You're at 12 million shares today. So we got 2 days worth of trading. So if in fact Green Mountain Coffee Roasters decides to close below this most recent swing point on the weekly chart, that happens to be at 112.77. Pretty good chance it's going to fall back to that level. So 112.77 is, its swing point, its line of demarcation. Now, what Green Mountain Coffee Roasters also has here, this is kind of interesting. So here is what's really the potential level of support. Here's where it's trading right now. See on this week right here of February 3rd, the week that began February 3rd, 69 million shares to the upside. So it's pulling back into that level with light volume. So this should be an area. This is a good area of horizontal support. So close below that, says price ought to pull back to about the $97 level. But if you're wondering, hey, why is price maybe holding at this level? It wasn't that long ago, a year ago, February 3rd, where you had a big, huge sign of strength inside of GMCR, Green Mountain Coffee Roasters. Let's go take a look at Clearwater Paper. Hey, how about that? Clearwater Paper. I don't know if they're in Clearwater, Florida out here. Probably not, but this thing is struggling, down 15% this morning. They generated a net loss of $27 million versus a profit. How about this? Versus a profit from the fourth quarter of $82 million. Man, they need some new CPAs, some new cut, paste, and assemblers out there. That is just, I don't know what it is that caused that. It certainly wasn't a revenue deal because their net sales, $472 million versus $470. So must be some kind of write-off out there. Must be some kind of write-off, and they're taking it in the shorts here this morning, down 16%. Let's take a look at this. This is its weekly chart as well, but we'll go and switch down to the daily chart inside of this ticker symbol, Clearwater, Florida. Get a feel for maybe where this thing is headed to. So gapping down, I'm sure, this morning. Yeah, and volume behind it, 144,000 shares. It's got a swing point. It's got like a high volume swing point down here. Looks like that's where it's headed to. But of course, the volume today, if it gets down to 59.81 today, it's coming into that swing point with way too much volume. That swing point only has 358,000 shares. So I'm still mean to do that. Pull this up, would you? Come on, there we go. Pull this up. And if it breaks through that level, let me pull this back. Oh, okay. Actually, so it could find some decent support here. So this Clearwater paper, back on July 24, 2014, broke out to the upside with now 437,000 shares. It's likely going to do more than that. We'll see if this has been an area, this 59.81-ish area, should be decent support out here for this equity. CLW is the ticker symbol. To the downside as well, down about $8 and change right now, is Alliance Data Systems. ADS is the ticker symbol. They're out with numbers here. Looks like revenues of $1.5 billion versus $1.14. So a nice beat there on the top line. Earnings per share up quite a bit out here. So they must be guiding lower or something, because the thing is selling off, down 3% right now, down 8%. Let's go see what this thing has in store for us. So if we take a look at Alliance Data Systems, ADS, big volume trading session on December the 9th. The low out there is 272.15. Volume is 1.8 million shares. Not a wide-ranging bar, but nonetheless, volume down there. There was a swing point low. That should act as support inside of Alliance Data Systems. The last time that was down into this area was back on January 6, 483,000 shares, light volume. So far today, about 133,000 shares. That should be your buy point is in the 270-ish range, so long as volume doesn't come out of the balloon. Talk about volume coming out of balloons out here. How about that? How about this little horsey out here? How about that Ralph Lauren yesterday? I mean, did that get sold or did that get sold? Holy Nikes out here. Look at the volume behind that move out here. You think that people weren't pouring out and, of course, pouring in. You had about 10.5 million shares traded yesterday. And that was on the daily chart that we're looking at out here. Ralph Lauren, last time it had that kind of a move, takes us back to the trading session. It was an earnings date, I believe. That was back on February 5th, 2014 out here. Where is this thing headed to? It's a really great question. But let's take a look at a monthly chart, see if we can find any kind of swing point out here with regard to let me see, with regard to where this thing could trade to. Ralphie Lauren out here. It's trading into this bar, I'd have to say, from August 2011, 47 million shares there on a monthly basis. This thing could easily trade down to about the 105 level. It's at 136 as we speak right now. Got a request here. Looks like I don't see a quarter, though, inside of the TFNN iTunes quarter machine out there, Pete D. I'm looking for that virtual quarter. I believe we do take Bitcoins around here. But nonetheless, let's go take a look at O'Reilly Automotive for our Tiger, Pete D. He's dropping that in right now. Very good. So is this going to $1,000 in the next 12 months? $1,000. Wow. It's at $200 right now. If it's going there in the next 12 months out there. I can't. I'm sure he's just having some fun out here. What it has been doing is this thing has been how about this? Well, let's see what it did in 2008 when it made a low out here, down at the $20 even Steven. It's now 10 times that. It's at $204 as we speak right now. This is a monthly chart that we're taking a look at to try to come up with A to B equals CD on this. Here's what it would look like. The A to B, let's go take a look at price projections out here, because we can most certainly do that on the monthly chart out here. So our A point is going to be down here on the trading session of October of 2008. Our B point looks like around May of 2012. Makes a slight retracement down into June. Come on, there we go. So this thing here, if you want to know where price is actually headed to, this thing's headed to at least 216.59. Should be headed to that level. And this is a monthly chart that we're looking at. I would say that pretty good chance this thing thing wants to try to make a move up to 249 based on the acceleration that this thing has had off of that C point out here. Now let's take a look at the daily chart. See if this thing, maybe there's a third gap or something like that. Maybe there's an exhaustion gap out here. This is a gap, and it's higher than the first one. It would be a real stretch. This qualifies as a This could qualify as a three-gap play. Now, what's a three-gap play, folks? Three-gap play is where you see three gaps. In this case here, our gap number one that I would use is the one that took place on July 24, 2014. Gaps up from the prior day. If we take a look at that gap dollar-wise, now somebody has to do the math on this. I've got a spreadsheet, but I can't open it up as we speak right now and do the math. But what you want to do is you want to take a look at that gap, which was from, the gap would be equal to, if you want to write it down, 147.01 to the low out here of 150.24. Figure out the dollar and the percentage move. Our second gap out here, that took place on October 23rd. So what you would do is you would subtract 163.72 from 160.78. You'd figure out the dollar and percentage. The third gap, and we won't know till the trading session is over today. Right now, what I can tell you the gap is, you subtract 200.87 from the high of yesterday, which is 193.30. If the third gap is greater than in dollars and percentage than the first two gaps out there, then it qualifies as a potential three-gap play out here. Third gap, typically it's an exhaustion move out there. Now, the other thing that you look for, and I'm not seeing any bearishness out here. We're just taking a look at potential patterns, right? You've always got to take a look at both sides of the trade out here. And if we take a look at that, what we've got to do, this could always set up a island top reversal if there was some type of gap down tomorrow or something along those lines. But at this stage of the game, things look pretty good. It's got good volume in it, 319,000 shares out here. And that's O'Reilly Automotive. That's the only real potential bearish pattern. It looks to me like it is. It looks to me like it may qualify as a three-gap play. And the percentage is the thing that I'm uncertain about out here. It may not be enough of a percentage move, and if so, then just simply doesn't qualify from that pattern perspective. Let's take a look at a couple other things here. Let me see what's moving here to the upside and downside percentage-wise. So you got the Tableau software. DATA is the ticker symbol. That's up a nice $13, up 15% out here this morning. Looks like their revenues, net income of $20 million versus 11. How about that? 100% beat on the bottom line. And on the top line, a big beat as well, 142 million versus 81. So that's nice growth out there inside of ticker symbol DATA. This thing also gapping up this morning, 901,000 shares inside this. Let me pull this back, see where this thing is trading into. So you got DATA, Tableau software, will try to take on its resistance here. This is significant resistance, or potentially significant resistance, was a bearish engulfing key reversal trading session that was on February 26th. And the high there was 102.37. That also would go ahead and complete at least a 1 to 2, A to B equals CD to the upside. Volume there. Easy for Tableau to eat into that. Now, it's not trading. I don't think it's gotten up to test the swing point here just yet. Let me see. The bottom of that swing point is, it is in there. Okay, so here's the deal with regard to ticker symbol DATA. It has gapped up this morning into a swing point with volume, because the volume of that key reversal, bearish engulfing, was only 900 some odd thousand shares. Let me see, what is it? Come on, I got a little system problem here still. 941,000. You're at 950,000 as we speak today. So 102.37 should be tested. Any close above 90, where is it? Come on, 97.08. Yeah, any close above 97.08, and 102.37 ought to be tested out there. That is inside Tableau software. Nothing blue about that as we speak. Let's take a look at, we looked at O'Reilly. Let's go look at WR Grace. GRA is the ticker symbol out here, gapping up. Let me see, what do they got here? They're out with numbers, net income of $15 million. Versus looks like 29 million from the prior quarter. Man, that's a drop. That's a drop. This thing is still trading higher out here. Most of the only numbers that are showing up on my screen. So this thing here is gapped up over its last set of swing points out here, which would take it to really the level right where it's trading at right now, right around the highs of $100 and 7 pennies out here. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow is up 116 points right now. S&P is up about 14. Composites up 27. Russell is up 10 points as well. Now, folks, next Wednesday here at TFNN, I'm going to do one of my favorite things, which is a workshop, about a 1-hour workshop, and it's going to be on the, the market has been extremely volatile. We talked about the consolidation. We talked about the chop that's going on inside of the market. And so because of that volatility, I want to be able to teach you what it actually means. But more so than that, I want to teach you how to use it as a trading tool. And so you can attend. I'd like you to attend. In fact, I would have to say, if you're, no matter what level of trading, this is a must. At TFNN, they've made it very easy for you to be able to attend this workshop. It comes by signing up for my newsletter service, but there's no charge to you. You do that for free. Your credit card's not even dinged or anything like that. I mean, it's a matter of taking just a few short minutes, coming on over, and so you've got access to my workshop. But you get access to my newsletter. But really, this workshop, many of you have been to either some of the free or paid workshops that I've done, and so you know the type of energy and effort that I put into it, and this is no less. I put it all out on the line. What I do is I give you actionable things that you can use, and it doesn't really matter what level of technician that you are. You want to be able to attend this workshop. If you can't attend it live, that's really no problem, because we archive it on your members page for the next 30 days. So come on over to the TFNN website. You'll see over on the left-hand side in this little window here for up and down, free newsletter and webinar. So just to go ahead and sign up, click onto that. It's going to be next Wednesday, 5:30, and it's going to be something that you don't want to miss. I promise you, it will be more than worth your time. It really, we should charge a small fortune for you to attend, and we do charge a small fortune. That small fortune is effort. It's effort on your part to come on over to the homepage and sign up for it. So come on over and do that and join us. So I hope to see you there. Now, back to the markets here. As we come into the close of this hour. What are we looking for? If we're looking for any kind of bearish signs out there, we don't see it inside the euro-Japanese yen. So that is the liquidity gauge inside of the market. It's not like we've got markets that are breaking out either. Remember, we're in those consolidations. They haven't broken just yet. But as we speak right now today, all points down to at least going and testing those highs out there, those consolidation highs. Euro-Japanese yen, the fuel to the fire, that's not pointing in it's not, the markets aren't going in one way, and this currency pair is going in the opposite direction. So that's out there. Inside the VIX index is trading. Where is it trading at right now? Which chart do I have up on my screen here? Here we go. It's trading below the 50-day exponential moving average. That's all you need to know. That's at 1761. You're trading at 1704 as we speak right now. So that's not suggesting that the markets are trading in the wrong direction as we speak right now. What else could we look at? Well, GE, General Electric, that was giving us a huge sign several days ago. The General Electric chart out here, the divergence sign, showed that we were making higher lows out here while the Dow was making lower lows. Always a bad sign for bears when that happens. Now, I can't tell you why. It must be that General Electric has all of its tentacles out there. What I can tell you is when that divergence shows up, it's a beauty. It's a beauty to signal to you as a seller or as a bear that there's a problem out there. And it's a signal to you that want to flip your trade to the long side that the general is telling you that there's going to be a market that's reversed, and that's what we've seen. So right now, it's all going to be about those consolidation highs. But folks, it is Terrific Thursday. Thanks as always for joining me. Get on over to the homepage at TFNN.com. Sign up for next week's workshop. 30-day access to me inside the newsletter service as well. Have a great Thursday. Look forward to seeing you bright and early tomorrow morning. Hey, stick around because hour 2 of the Traders Edge is up next. We'll cover all of the ETF structures out there and anything else that you'd like. Have a great Thursday, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.